Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1231A, and today's date is March 17th, 2017, and the title of the episode is, This Economic Indicator Just Confirmed We Are in a Recession and Headed for a Disaster. Let's get into the economic collapse financial news. Now, something strange happened with the UMich Consumer Confidence. And we look at this to see, what people are thinking. We also look at the Gallup survey to see how people feel about the economy. And what's very interesting about it this time is that Republicans and Democrats, they look at it completely differently now. They look at the economy completely differently. Now, remember, Obama handed off this strong economy to Trump. At least that's what he said. We know it's a complete illusion. We've been looking at all the economic indicators. We've been delving deep into the numbers, and we can see that there's no way that this is a strong economy, especially when retail is contracting. GDP is a complete illusion. The unemployment numbers don't even make sense. The Restaurant Performance Index is continually declining, and we can see that the economy is a complete mess. But what's very interesting about all this, it's only been since Trump came into office, since it was January 20th, and now here we are, March 17th. By the way, happy St. Paddy's Day for those people who are celebrating St. Paddy's Day. What we are seeing is that Democrats now, they are saying they are expecting a recession. Now that's just strange in itself, because just a couple months ago, 2.5 months ago, this was the strongest economy ever. Now, what has Trump done? Nothing. He hasn't really done anything to the economy. I mean, the stock market's gone up, but it wasn't like, we just had, 22 manufacturing plants built. We just hired 700,000 people. That didn't happen. Actually, we're still on course for the same exact thing that has happened since Obama was president, a collapse of the system. And now Democrats are saying they're expecting a recession. Now, on the flip side, the Republicans are saying, we see incredible growth ahead of us. Really? Incredible growth. How possibly can this be? Now, what gets even stranger than that? We've been talking about the Atlanta Fed and how they look at GDP and they make a forecast. And they started out around 3% or so, and they kept on dropping it. 1.9, 1.7, 1.2, they're down to 0.9%. Now, the New York Fed, they have their own forecasting, and they are showing a robust 3.2%. Now, these are completely opposite. 0.9%, and all of a sudden, we're at 3.2%? How possibly can this be? Something's not right. So this is very interesting going forward right now, because we have two forecasts that are completely different. Now, if we look past all of this, we see many interesting and different things, because if retail is contracting and more stores are closing and more individuals are being laid off and car sales are slowing and delinquencies are on the rise and construction is slowing, where is manufacturing producing? Doesn't make sense. Something is not right. And how do we go from a 1.6% GDP all the way up to a 3.2%? Unless you're manipulating. Because in 2.5 months, again, something doesn't make sense. Now, of course, we've seen manipulation before with the GDP, where numbers are revised. Just right before the elections, we had this export of soybeans, which pushed it up to 2% or so. Then they revised it a little bit more, massaged it a little bit more, made it 3%. But that's manipulated. And when we look at the Atlanta Fed, they've been right on target, I would say 99% of the time. And something else happened that was very interesting today. A seller dumped 9.24 million Apple shares in a single block trade at the NASDAQ Open, amounting to just over 1.3 billion worth of Apple stock. Now, why did they do this? Do they know something that we don't? Because we see a lot of these things where all of a sudden people dump a lot of stock, or silver is smashed down by a lot of paper contracts. Gold is smashed down with a lot of paper contracts. And we're starting to see a lot of strange things happen during this period of time. And we've seen all the soft data that's been saying that we've we're in this Trump euphoria, this Trump bump. Well, that's all disappearing right now. And we see the hard data is showing that things are rapidly deteriorating. Now, we had a brief jump in December for U.S. industrial production, and we can see at this point it was unchanged. But what's very interesting about this is that industrial production has been declining since the beginning of 2015. And when we see something like this, it tells us there's something wrong. So the Fed just raised the rates into a weak economy. And then when we look at the industrial production chart, well, and we look at the hard data, we see that something has gone terribly wrong. Because industrial production has never declined on a 24-month basis without the U.S. economy being in a recession. And if we go back in time and we look at this one particular chart, we looked at many other indicators showing that we're in a recession, but when we look at this chart, it matches up perfectly. If we go back to 2007, 2008, industrial production dropped. Same thing when we go back to 2001. When we go throughout back in time, we see it at each and every point. And here we are, where industrial production is continually declining, and now it's been 24 months. And that tells us that we are in a recession right now. And the central bank knows this. They know exactly what they're doing. They know they've just raised the rates into a very weak economy. Now, the deep state, the central bank, well, they're getting ready to pin the coming stock market collapse on Trump. He is the fall guy. So when people think Greater Depression, they're going to say Greater Depression equals Trump. This is what they want in the end. Right now, the Federal Reserve is the deep state's weapon of choice. The economy has been on life support since 2008. We know this. This is why we've been tracking it. So there's no surprises. We know exactly what's going on. The Fed has pumped it up with a huge amount of stimulus. This has created enormous distortions and misallocations of capital that need to be flushed. Trillions of dollars in money printing have been continuing. Quantitative easing 1, 2, 3 has been used. Meanwhile, we have zero or even negative interest rates in many countries. Rates are the lowest they've been in 5,000 years of recorded human history. If the deep state wants to trigger a stock market collapse on par with 1929, it just has to pull the plug and just say, we're done here. But they don't want to do this because it will look like they actually did it, and people will blame them. And this is why they haven't done it as of yet. But the outcome of where we're headed and what's going to happen, it's already baked in the cake. It's just a matter of when, and there's a good chance when is coming up pretty darn soon. So let's go back a little bit here. In December of 2015, the Fed raised interest rates for the first time in almost a decade from 0 to 0.25%. And then December of 2016, it did it again when it raised them to 0.5%. The Fed also now just raised it once again. Now, they came out and they said they're going to be raising the rates many more times. Now, there are important dates to remember because the FOMC meetings in 2017, well, they happen at different times during the year. One is in May 3rd. The other one is June 14th. The other one is July 26th, September 20th, November 1st, December 13th. And this is when they will come together and talk about raising the rates. Now, they said they were going to do this, 3 times this year, maybe 4. So these are the dates that we're going to be looking at as we move forward. And if they raise it, let's say in May or June, that is another signal to let you know they're going to be bringing it down. Now, are they just going to raise it another 25%? Most likely not. What they're going to do is they're going to raise the rates and they're going to push the rate up even higher. And that's how they're going to bring this down, because they're going to say, okay, we did 25 basis points last time. We're going to raise the interest rates 50% this time. Now, if we see that happen, that is a signal. So once this begins, this is the problem the government is going to run into. And let's forget about the stock market or the bond market right now, because they're going to have their own problems. Because we know when they raise the rate, well, things are going to go very differently for the government. Because right now, the government needs about $400 billion from taxpayers to pay the interest on the debt. And tax receipts right now are just over $2 trillion. If interest rates rise 1%, the government would then need $600 billion to pay the interest on the debt. And remember, all these funds that they're receiving, they also are used for other programs and things, and they also have to borrow from the Fed. 2%, they would need about $800 billion. 3%, it would need $1 trillion. 4%, it would need $1.2 trillion. If it went to 4.5%, we're coming up to the $2 trillion mark. So clearly, none of this is sustainable right now. And where we are headed and what we have seen shows us that we are headed for a complete disaster. The central banks, they don't do this quickly, even though it seems like it's happening quickly, because all of a sudden the bomb bubble is going to burst, the stock market bubble is going to burst, and people think that, it just happened on that day. No, it didn't. It was a buildup to that time period. That's how they play this. They've done this in the past. Do you think it just happened in 2008 on October, just out of the clear blue sky, that everything was fine and all of a sudden everything just came apart? No, it was falling apart way before this. Real estate was in a bubble. The subprime security, that was complete garbage. That was in a bubble. The stock market was in a bubble. I mean, everything was in a bubble, and they knew it was coming down in the beginning of 2008. Things started to deteriorate quicker and quicker and quicker as we moved throughout that year. And then, boom, all of a sudden it hit. And everyone thought, it just happened on this day. No, it happened way before this. Actually, go back to 2006. You can see signs of it from then. Go back to 2005. You can see it at that point, but no one wanted to believe. If you're not tracking it, you're not paying attention. If you're not paying attention, you have no idea what's going on. Here, we've been tracking it. We know we're not in a recovery. There is no such thing as a recovery. It's an illusion that they created. And now, they're going to bring down the illusion. They brought it up. They're going to bring it down. Get prepared. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.